Welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. I'm trying to put trading in the real world, and this is a quick series of videos just answering simple trading questions driven by you guys in the comments below each video. Very simple. And today's question is a great question, and it comes from one of the YouTube subscribers, Malena Hargel. Not sure where you're from, and I do apologise if I haven't pronounced that correctly, but your question is a great one, and it is, what is the best time frame to trade, and does it dictate the trader? Well, why do I think it's a great question? Because I think it's a question nearly every trader asks at the beginning of their career. There are two major questions I get asked all the time. What is the best pair to trade? Well, you've seen me trade every single one of them. There's no best one. You can trade them all. A chart is just a chart. You just need to be patient. But the other side is, what is the best time frame to trade? Now that is a good question. You see, I think a lot of traders get hung up on this question. When you're new, you automatically gravitate to the lower time frames, and you think you're going to be in and out the markets and making a fortune, 5-minute and the 1-minute charts. However, the mistake that I see over and over again is the expectation of the time frame, and I'll clarify that before I move forward. If you're trading a 1-minute chart, which I don't recommend, by the way, it's incredibly difficult, the range of that chart may only be 6 pips at best, but your expectation is 30 pips. So unless you're dead on, you're going to fail, because the range of the time frame will not stretch that far. So think of it this way. I constantly tell you guys a rule of 3, and there's a rule of 3 in targets. Don't look for the bottom third, don't look for the top third, look for the middle third. 3. So if the range of that chart is 6, you're only going to get 2 pips at best, safely. But if you have a spread that is 2 pips, then your net result is 0, and that's why you fail, because your expectation of the time frame is greater than what the time frame is willing to give. So I'm going to reframe the question and let the time frame decide from your lifestyle. So if you have a lot of time, like myself, I do this for a living, so I'm in front of the screen all day, I can be a day trader, okay? But the time frames that I trade on are relevant to the day that I'm trading. So what I'm looking at is a 4-hour and an hourly to give me a direction, and an execution chart of a 15 just to place the trade. The 15-minute has nothing to do with the trade, it's just fine-tuning the entry point. The decision of the trade was made from the higher time frame, and that's for a day trader, okay? Because I'm looking for 1, maybe 2 trades a day, that's it. If I was scalping, the 4-hour is a little bit too far away, so I need to dial down what I'm looking at. So I'll be looking at the 15-minute and the hourly to give me a direction, and I would execute on the 5-minute. Okay, I hope this is kind of making sense. It's a rule of 3 all the time. It's 3 charts. So there isn't really one time frame that's best, but I will move on to that as the last part, as a little caveat. Okay. But if I don't have time to trade during the day and I have to be a swing trader or a position trader, I would look at 3 higher time frames. So if I am swing trading, I look at the weekly, and the daily, and I'll enter on a 4 hourly. If I haven't got time to look at the charts throughout the day, because with a 4 hourly you still need to look at it 2 or 3 times a day, I'll be looking at what's called end of day trading, where I only need to look at the charts once a day at a set time, say 9 o'clock at night. And I would look at the monthly chart and the weekly chart to give me a direction. And I would execute on a daily chart. Okay. But put that aside, if I had a gun to my head and I could only have one chart to trade, it would be the 1 hour. You see, the 1 hour is long enough to gauge a direction and short enough to be able to execute that direction. It is the single most important chart. So I hope that kind of makes a little bit of sense. Like I say, these are just quick bite-sized chunks, just to give you a guide for when you're looking at the other videos that they may make a little bit more sense. So I hope you enjoyed that, because I'm going to enjoy this, because we all know Scruffy likes a coffee. And remember guys, do what you love and the money will follow. I'll see you on the next one.